Hi traders, welcome to the new weekly forecast for the trading week beginning on 2nd of September. It's not only the new trading week, but it's also going to be the new trading month. And in the upcoming week, we have two major announcements related to monetary policy. First is Canadian Central Bank and also Swiss Central Bank. They are going to announce their new interest rates. And the most important is non-farm payroll announcement scheduled on Friday. Usually I record my videos on the weekend when the market is off, but this time I'm doing it on late Friday. So today I'll be checking the charts in the live market condition. Most of the currency pairs or instruments, they are right now behaving very dull. The market is very slow and there is not good alignment on the basis of technicals and fundamentals. Still, we'll go through the charts and find the tradable setups for the upcoming week. So let's begin the chart reading, and the first instrument I'm going to cover is dollar index. Moving to weekly now. Now here, based on dollar index chart, it has reached an important support and the psychological mark of 100. So let's mark the important support here. So the blue line is representing support, and I can see that on the basis of, one second, where is my marking tool? Here. So I can see that on the basis of the weekly support, we are experiencing some bullish bounce over here. So the selling is now subdued. And let's move to daily. Now on the basis of daily, the pattern is still bearish. No change in the market structure. High, lower high, lower high, lower high, lower high. And this is the last lower high which is now being breached. And I can see the histogram has turned bullish, slightly bullish here. The next we'll move to, although there is no, yes, there is a divergence on the basis of histogram only, but not on MACD line. So when we get divergence only on one of the components of MACD, especially when we get on histogram but not on MACD lines, we expect a short-term pullback here. Now I'll be referring to the lowest point here. So we can expect the retracement between this high till this low on the basis of histogram bullish divergence. Let's move to the next lower time frame, that is 4-hourly chart. Now here on the 4-hourly chart, we spotted bullish divergence, and it's a double bullish divergence. Currently it is trying to breach the BOS mark. So short-term buyers, they have come back in the dollar market. Moving to 1H. On 1-hourly time frame, we got the double bottom with bullish divergence, double bullish, and we also got the BOS, and the structure becomes bullish here with higher lows, low, higher low, higher low, flat lows, double bottom, and in conjunction with higher highs. Now again, the pattern is not very strong here, but still we can expect short-term correction. So until buyers hold above the level of 100.89 or 100.90, we can expect that in the short term, dollar index may remain bullish, and maybe on the next NFP announcement, again the market turns bearish for dollar index. Now let's move to the instrument euro dollar. Now since dollar is getting slightly bullish, so we can see the weakness coming in euro dollar. So euro dollar is exactly the inverse of dollar index. Starting from weekly, now cleaning the chart here. So what I've done here, I've applied a marking on this resistance here. So euro dollar reached an important area of resistance, bumped into it, and lost the bullish momentum. So here MACD histogram is showing loss of momentum, although we did not get any lower lows or lower high formation. I'm applying fib extension starting from the lowest, moving to the highest and the higher low. So on the basis of fib extension applied on weekly chart, euro dollar is expected to reach at least 1.1462, and the pattern still remains bullish. The only fact is that buyers, they are now losing momentum. So short-term pullback is anticipated, highly anticipated. Now let's work on the daily chart. On daily frame, the pattern is low, higher low, higher low, higher low, in conjunction with higher highs on histogram and higher highs on MACD lines. So when we have higher high formation all around with no bearish divergence in place, so that is the reason I'm saying that we can expect short-term pullback, not a major reversal, and then continuation in the upward direction. Now I'm going to apply fib retracement starting from the last turning point. So this is the latest turning point. I'll be using this turning point as the start point of my fib retracement, and I'll connect to the latest high. So let's apply fib retracement. So here we go on the retracement, and we can expect 61.8. So the major turnaround is anticipated around 1.0944. So moving to the next lower time frame, that is 1H. Now on 1 hourly frame, I can see the pattern is clearly bearish. We have sequence of lower highs and lower highs in conjunction with lows, lower lows and lower lows, and no higher high formation, and 1 hourly remains bearish. There was bullish divergence, but it failed because the BOS never happened, and the sellers, they remain in control on the lower time frame. Any which ways, I'm not interested in selling. I'll be waiting for euro dollar to reach an important level of support, the retracement level of 1.095, and I'm expecting a bullish turnaround, and I'll be interested in joining the buyers. Now the next instrument I'll talk about is pound versus New Zealand dollar. Again, back to weekly frame. Now on the weekly frame, there is huge bearish divergence which is not yet done because I do not see MACD lines crossed in the bearish direction. So it is anticipated and not yet completed. On the other side, we also have high and higher high in conjunction with high and higher high of MACD lines with higher highs on MACD histogram as well. So this gives me the idea to apply fib retracement starting from the latest turning point, the bullish turning point. So this is the latest bullish turning point I'm talking about. So I'll apply fib retracement from this low to the new high to the latest high, and let's see the retracement levels on the chart. So I'm expecting a bullish turnaround in this instrument from the important area of 61 to 80. So we are already below 61.8. So the next important support level is around here. So the price mark of 2.088. Moving down to daily now. Now on daily, it's currently bearish, continuously making lower highs, lower highs, lower highs, and lower highs. This support is gone, and it is going to print a new lower low, and there are signs of slowdown, not fully, but I can see on histogram it is forming continuing bullish divergence, probability of forming continuing bullish divergence. My mistake, it is not yet there, so there is a high probability around this area at the price level of 2.08819. Moving to 4H. Now on the 4H time frame, I can see the sellers are losing momentum here because there is a sequence of lower highs and lower highs all around in conjunction with lows and lower lows. But when I'm comparing the last two lower lows, I can see there is bullish divergence which is already being formed on histogram, and we are very close to completing the one more low around fib retracement 80% and completing histogram and MACD lines bullish divergence here. So we'll be waiting for the divergence to be there and break of structure in the bullish direction. On the lower time frame, 1 hourly and 15 minute, the pattern is still bearish. So I can expect pound New Zealand dollar to complete its fib retracement 80% coming from the high time frame and then go bullish. Based on the current behavior, I can see there is double bottom. This consolidation was broken with higher highs, and now I can also see a higher low being formed. So there can be some short-term bullish pattern before making one more low and then turning permanently bullish. So ultra short-term situation is slightly bullish. medium term is still bearish, and moving forward, once it completes Fib retracement 80%, I'm expecting it to get bullish again. We can also apply Fib extension in the downward direction, which will give us a clear idea about the levels which the sellers may complete. So applying on the first leg down, so this becomes ABC, and we are currently exactly on 61.8. If we break Fib retracement 80%, that is the golden marked zone here, then it is going to Fib extension 100%, which would be around 2.07039. So alternative scenarios explained here. Based on the current price action, it looks still bearish. So pound in comparison to New Zealand dollar, short term bearish, expected to turn bullish again. Now the next instrument I'll talk about is crude oil. Let's go to weekly first. And here on the weekly frame, as I've explained earlier, it is consolidating in a triangular pattern. So this is the triangle I've marked on weekly frame. Now it seems that the sellers have taken control, because I can see a break below the triangular pattern, which is a sign of bearish continuation. And we also see lower highs on the weekly frame, and now we are getting lower lows. So lower lows and lower highs, histogram looks bearish, ultra bearish. Moving to daily frame, I'm going to apply Fib extension in the downward direction, starting from this high, connected to the first low and lower high now. So crude oil has already gone below Fib extension 61.8, that is the price level of 75.14, and the next level in sight is Fib extension 100%, that is the price mark of 69.93, or we can say round figure $70. Highly anticipated. I can see that there was bullish divergence on histogram, even on MACD lines, but it failed because the buyers, they could not create a higher high. So it's a failure of divergence. Now I can also apply 2 or 3 more Fib extensions in the downward direction to get the magnet zones. So we need to change the color of Fib extension, the second one, let's make it blue. So the next level inside on the second Fib extension is 61.8, that is a price mark of 71.15. And if it breaches 69.93, then the next level inside is 66.83. But most likely I will revalidate when crude oil reaches around 69.93 to 71, or the psychological mark of $70. Moving to 1 hourly chart. Now even on 1 hourly chart, I can see the control with sellers. So we have sequential lower highs and sequential lower lows all around, and no signs of divergence, no signs of reversal. 15 minutes again looks ultra bearish. After this huge fall, we can see some short-term pullback, but the rise should be taken as an opportunity to sell. The invalidation would be closure above this level, that is around 75.50. So if buyers, they come back in the market, we need a validation by the closure above 75.50. And finally, the next instrument is gold, and right now gold is under pressure. I'm going to explain. This could be short-term pressure because the higher time frames, they're still ultra bullish. Again, I'm starting my Fib extension from the weekly, and why I'm marking in the bullish direction, because we have sequential higher lows all around, sequential higher lows and even higher highs. A bearish divergence is highly anticipated because now I can see a slowdown on MACD histogram, the latest one. So it is anticipated. I cannot work on anticipation until I see the formation of bearish divergence. But definitely the buyers, they look exhausted here. I'm going to mark Fib extension in the bullish direction here. And here we go. So we are above Fib extension 161. That is the price mark of 2445. And the next level inside is 2589, which I've been explaining in all my previous videos. Here I'm going to mark a rising trend line connecting the higher lows on the weekly chart. The next rising trend line will start from the lowest point touching the rising trend line, the second higher low, and the subsequent higher lows. Finally, I'll move down to daily chart. Now on the daily chart, I can see there is loss of momentum and the histogram has turned downwards. There is a probability of a bearish crossover here. If it is done, then we will get the completion of bearish divergence here, like this. But only bearish divergence is not sufficient. We also require the change in the market structure. So BOS is also required. Now I'm going to mark another rising trend line starting from the touch point of the second trend line and connecting to the next highs. So if this rising trend line, the latest one, is breached, then we can expect deeper correction towards the next rising trend line if it is breached. So we still need to wait and watch, and the next week is going to be critical, crucial, because it's the NFP week, which is always tricky to trade. Now moving to 4-hourly chart. Now on the 4-hourly chart, I'm going to apply one more trend line starting from the connecting point on the latest trend line and joining the latest higher low, which has created the last highest point. So you always need to connect the low, the next higher low, and you need to connect to the latest higher low, which creates the latest high point. So based on the latest rising trend line, I think it's better if I change the color of this rising trend line. Let's mark it blue. Now based on the latest rising trend line, that is the blue colored rising trend line, I can see the gold has gone outside the trend line, means the trend line is breached, and we got the break of trend line. We got the perfect retest, and now I can see high and lower high, low and new lows being formed. So this is showing weakness in the buyers. So this is an important level, which is around 2480. If 2480 is breached, then I can expect the retest of the next rising trend line or fib extension 161.8, that is the price level of 2445. Still too early to comment on this, and fundamentally there is no news against gold. Only technically I believe it could be a sideways range as well. So pay attention when it comes to the psychological mark of 2500. It might bounce back. If it breaches this area, then look for the next level at 2480. If it breaches 2480, then it may move to 2445. So trade cautiously. It's NFP week, and I hope my analysis adds some value to your trading plan. Have a profitable trading week ahead. Bye-bye.